Alrighty, what's going on guys? Edward here, back with another video, and this time I'm going to show you how to spot a very high probability POI or demand zone or supply zone, and whatever case scenario is, it's going to apply. It's going to be the same basically. I have posted similar videos like this one before. If you are actually new on the channel, I'm going to leave a playlist on the top right corner right there based on smart money concept, and I do have a lot of videos on smart money concept that you can learn from if you're interested, if this is a subject that you're actually interested to. So, and I would appreciate it, if you give it a big thumbs up, and it motivates me to keep posting content for you guys more often based on this. If you want to see me posting something new, you can leave your comments and I'll definitely be answering them, and I'll most likely be actually doing the things you're actually requesting from there. So why not actually leave your comments below, guys, if you have any questions or concerns. All right, so let's go ahead and start with this thing right quick, and very simple to understand that I'm on a daily time frame. This is euro odd. Okay, this is a currency pair. Doesn't matter where you use this, it's pretty much the same everywhere. Okay, price action is price action, and you can use it anywhere. All right, so right here, the first thing I'm going to focus is the most recent break. Okay, literally that's what I need to focus on. I'm on the higher time frame and I'm focusing on this break. So if I have a break to the upside, that means that I should be looking for buys. Okay, market is most likely trending, and I'm seeing that it's actually trending. We have a break, we have another break, we have another break right there, right? So it's easy to see that it's trending. Okay, now one thing I normally do, if I know that there is a boss, so let me explain here on something like this. If I know the price has recently broken, right, that previous high right there, what am I expecting? Just ask yourself this question. What are you expecting after a break like that, after having an impulse, right? We're expecting a pullback, a correction, right? Now, of course, Eduardo, but I'm seeing, multiple things. I see an impulse, a correction, impulse, correction, impulse, correction, impulse, and so on, right? Like this line that you're drawing right here is not as it is right here. And that's right. But that's why you have to understand market structure. And what I'm drawing right here, this line, all right, let's say just like that, internally, it's going to have it's going to have another trend internally right here in lower time frames, right? Then of course it's going to start doing this. So you're going to see the internal structure, which is this one. This is internal structure, right? And the actual move, you have to understand that this is one single move so far. On higher time frame, it's one single move, okay? Like this move right there, okay? One single move, of course, but there is more noise, okay, in the middle. But anyways, that's not my focus. What I want to see is, where am I expecting? If I'm expecting a pullback and I have a boss right here, this is my break, right? I'm expecting a pullback, all right? No matter how the impulse was, sometimes the impulse can be like this. There's more buyers than there were sellers. Prices pushing very strong to the upside, just like that, right? I don't consider this as a pullback. Okay, this is just a minor correction. What I'm going to do is I want to use my Fibonacci, right? Just to measure where is the 50% of the move, okay? From all this impulse right here, I want the price to pull back to the 50% of that impulse, okay? Now, if we are below that 50%, this means we are in a discount area. This is the premium area, okay? So technically means that we're going to be buying when price is right here, and we sell when price is right here. We buy low, we sell high, okay? It's very important to understand. We buy low, sell high. That's why we use premium and discount. And this is definitely going to, oh, you have no idea how much this simple thing right there, it can save you. Okay, so it can save you because I see sometimes people is actually trying to buy from here. I want you to understand that most traders, institutions, and big institutions and professional traders are not buying from here. When price is actually pulling back, they're maybe looking for sales, right? All the way down here. Then once the price is actually on the discount area, they're in buyers right here all over this place. They're interested in looking for buys. Okay. If all of a sudden fails and start breaking, maybe we're having a shock right there. Okay, something happened. This case, maybe the price is reaching I don't know, maybe a huge supply zone, right? That would be the reason why market is reversing, right? Because it's reaching a huge supply zone. There is a reason why price will drop and cause a shock now to the downside, right? But if there is no reason, there's nothing here, probabilities are telling you that, hey, yeah, price will most likely continue pushing up. Understand that little concept right there that I just explained, right? Because this is what we're going to be using. All right, let me clean this now. And here we go. So I'm going to be using my fib from the lowest point before the break, the lowest point before the break, okay? Again, the lowest point is right here, okay? It's not this one, it's not this one, it's not this one. This is the lowest point. It's not this one, it's not this one, right? This is the lowest point. I hope it makes sense. So I'm going to use my fib right there. Technically means that, okay, I am seeing a boss. So I'm expecting price to pull back somewhere to my discount area so I can buy, okay? Because I'm bullish, all right? So far, that's my last high. I don't know if it's going to stop the price right there. I don't know yet. I'm just going to continue, see what it's going to do. You see, price just get pushing, created another high. All right, I'm going to stretch my fib all the way to the top. I want to wait still for the price to be on my discount area, okay? So let's see, we wait. Oh, what do we have? Price created another high. So, all right, we're going to continue stretching the fib. We still wait for the price to actually pull back. I am measuring from the move, guys. Okay, let me do it again from here. What I'm doing is I am measuring my fib from this whole swing move, okay? If price all of a sudden keeps pushing, I'm going to still stretch it. My main point is right here, that low, okay? So I want to wait for price to definitely at some point maybe be here to start looking for actual buys, all right? So if price keeps pushing, I'm going to keep stretching my Fibonacci. Just like that, I'm going to keep stretching my Fibonacci. Pushing, all right, keeps pumping up. It means price is not ready to pull back just yet. Keeps pushing. Boom, boom, boom. Look at that. The momentum is still very, very strong to the upside, and it's not ready to pull back just yet. It has had some minor corrections, but I want you to understand that this is still one single impulse. In higher time frame, this is one single impulse, right? A bigger, much bigger correction is coming. At some point will come. So there are plenty of ways. What I'm trying to do here, guys, is I want to show you that be careful when you're trying to anticipate the end of this move. Okay, when the price is trending, has a nice uptrend right there in lower time frame. If we go in H4, H1, 50-minute, that's a nice uptrend, right? And we're trying to anticipate a pullback. Be careful. Sometimes you might actually be caught in a lot of false, maybe supply zones that you might think that this is a chalk right there internally, right? Price pulling back to this potential supply right there. Price breaks that supply and just instead continues pushing up. So be careful. Going against, like selling when the trend just broke and the price is bullish, doesn't make sense. You can still sell, but it's very risky. What's the reason where we could be selling? Look at that. Now we're starting to have a much bigger drop, and it's much clear right now on the daily that we have a potential chalk right there. Our last boss was right here, and we have a potential chalk. I'm going to ignore at the moment. I'm going to be ignoring sales. I don't want to go selling, but maybe this is an opportunity to perhaps look for a sell. At this point, I'm going to ignore it. All right. What I'm thinking is that price from there, after showing this chalk, is maybe going to mitigate the zone and maybe drop. Okay, all the way down. So let's see. Price is actually ready. So If we see the market is moving to the downside, mitigated, it went bullish, chalk, the change of direction right there is showing you that it's going bearish momentarily, right? And now it's going into my discount area. So it's finally pulling back, okay, from the whole swing move. This is my swing low and this is my swing high. Strong low, weak high, okay? Now, what do we do at this point? Okay, I'm going to mark up the zones that I have, okay, because there are a couple. Sometimes we're going to find maybe one strong demand zone, or sometimes you're going to find a couple more, maybe two, sometimes even more. Right here, I have this potential one. I'm going to be looking for the zones that I think they have pretty good chances. Okay, now one thing I'm not going to be doing is placing buy limit orders everywhere. I'm gonna be placing a buy limit order right here, another one here, another one here. No, I don't want you to do that, guys. I don't want you to do that. What I want you to do is, I'm still on the daily time frame. You see, I'm still sticking to my time frame. What I want you to do is to zoom in these areas. Once the prices start actually getting into um, a POI or a zone that you're interested in, you're going to be zooming in lower time frames and you're going to look for a chalk. Okay, you see, I don't really pay attention what's happening right there. Okay, that's another break, and I'm marking everything up. I'm just interested in looking for a chalk in certain areas. Where am I interested in checking for a chalk? If the price, for example, right here was reaching a very strong supply from the past, in the past, this was a supply. Maybe there is a strong supply zone right there that we don't see, like it's somewhere behind there, right? That's the reason why I could be looking for a chalk. If the price is reaching a zone, that's the only reason. But if the price is not reaching that, if there is nothing in here, then I'm still continue bullish. I'm still in my direction is still bullish. you know so I'm ignoring the sales at the moment. I'm just going to wait for the price to do its thing and reach the zone. So it happens to reach, is actually touching the first zone. How do I know this thing is going to push up from there? I don't know. Nobody does know. Like, if you find some YouTube videos on saying that yes, this is the actual PI that's going to work, or this one, it's bullshit. It's total BS, because they don't know. Nobody does. Okay, we just literally, what we have to do is just go in lower time frame and find a reason why you would be looking for a buy right here. All your confluences. So my first confluence, okay, on higher time frames, I'm bullish. Price is already on the discount zone. I am touching a potential POI. It's a point of interest, okay, where buyers could start getting interested in, right? So you having more confluences now. Now I'm going to go in lower time frame. I'm going from the daily to the 1 hour. That's more than enough. That's a lower time frame already. You can still continue going 5 minute, 15 minute. Oh, you can still continue. But for this example, I like going from the daily to the 1 hour, and I will see what the market is, how it's going to be reacting in this area. Like, we see that the market is having a lot of a struggle right now. Did not break below right there, so that means this is an inducement right there. Let's see right here. So at the moment is having another inducement. The body of the candle is not closing below. I just want to see if you see we're having another inducement to the upside. So this is indecision, guys. When you have wicks like that, it's indecision. The market is not ready to move anywhere just yet. Market can still continue crashing. Look at the size of this rejection. That's strong. It's telling you price is not ready to move up just yet. It can actually continue crashing and maybe going for the second one. So the only reason what I would go here on a buy is if I see a boss and a chalk, okay, in lower time frame. So I want to see a break of a structure and I want to see a chalk. Boom. Okay. You see what would have happened if you place already your buy right here and your stop loss below the zone? Boom. Most likely you would have got stopped out, right? We're actually trying to look for a buy in this zone, right? So what's happening? now we are having a break of a structure to the downside. So this is telling me that prices is still bearish. Okay, even in a lower time frame, price is still bearish. We have a boss now. Most likely we're going to continue now to the downside, right? Now, of course, from here, where our chalk would happen, if the price wants to go up, we have a chalk right there. That's where the chalk would happen, okay? The change of direction would happen somewhere there. But at the moment, we're sort of still bearish, okay? We don't know if price is going to push up from there. But so far what we know is this is our last break of a structure. Maybe price can continue to the downside. So, oh, okay, look at what we're having right here. Price is showing me signs, and I would prefer the price to actually close, the body of the candle close above. I would call this an inducement. But because we already spotted our boss, which confirmed the breakout, you see the actual candle did close below, but then retrace back up. And now right here for the chalk, when it comes to the chalk, I would be very cautious with this one. I normally take that as a chalk, even though it did not close above. It looks more like an inducement. But in this reason, because the market is actually in my demand zone, daily demand zone, and I'm looking for an excuse for me to go buy. So this would be my excuse. I would definitely be taking chances on this one if I happen to see, even if it closes like that, just the wick right there, the body retrace a little bit, I would still take it. In lower time frame, that's actually breaking to the upside. So the first zone, you can actually do this again. You can use your fib again from the low, right, before the chalk happened. So from the low to the high, where do we have our most recent POI? Right here. I do have a nice POI right there, right? That's the cleanest one, and I believe it's the only one because this one has been mitigated. There's nothing right here. Just this is the only one that is actually clean. So if you want to make it smaller, you can actually go in lower time frames. You can actually refine this order block. I don't mind this order block. To me, it's already small. I can place my stop loss just right there. And the take profit, you could aim this high right there. That's a 1 to 7 risk to reward. Or because we already know that I'm on the daily time frame, you could actually be aiming your target all the way to the daily zone, which is this one. That's the highest point right there. Okay. So let's go back to the 1 hour and let's see what's actually going to happen. Price is mitigating the zone, and boom, we're starting to have now that strong break to the upside. So look at that. Price has shifted already. You see, it showed you, it gave you the reason why you would be buying. You see, if this zone would fail, maybe it's not going to give you a reason. And even if you get stopped out, the price fake you out, trying to push, when it all of a sudden crashes, you're losing 1%. You should be risking 1% per trade, 1 or 2% maximum. Okay? Watch out. Don't go crazy whenever you see potential scenarios like that and just be risking your entire account on that one. you know so from there, you see price pushed up. I believe this is still open and running. And the target has not been reached just yet, but it's about to be reached maybe in the next few days, maybe next week. Today's Friday. So anyways, you see that nice push. This would have been a 1 to what 1 to 68, 1 to 68 risk to reward. If you wanted to get it even better, you go in lower time frames. I don't recommend refining the order block too much, but hey, this, guys, it's an idea again on simple market structure, how you catch a really high probability POI is just by going in lower time frame and finding out by yourself, do we have a rejection, do we have a chalk in lower time frame? If you have a chalk, spot your POI, your most recent. And in this particular case, there was only one, right? Only one nice formation right there. So I hope it makes sense. Let me know what you think in the comment section below. If you want to see more videos like this, if you have some doubts, concerns, let me know and give it a big thumbs up. It motivates me to keep posting videos for you guys, more often. So please subscribe, and I will see you guys in the next one. Take it easy, guys.